Hello, I'm Greg Bunnell. Welcome to Market Call. Jaime Carrasco's on the show today. He's a portfolio manager at Canaccord Genuity. He wants to take your calls, emails, and tweets on precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call, toll-free, 1-855-326-6266. You can also send an email to marketcall@bnnbloomberg.ca. Good to see you again, Jaime. Always a pleasure to have you here.
Thank you for having me back. Always good to be on.
I know you're a man who always keeps a sharp eye on the things that concern us in the global economy and domestically. And for a while now, you've been saying you're not happy with what you're seeing. And I assume from some of the different messages we're getting now on the Fed and the Bank of Canada and from economists, your suspicions are only getting confirmed.
Well, I've taken a contrarian approach for quite a while because I come from the bond side. I think debt is debt is debt. You can't solve a debt problem with more debt. I'm happy to say, though, that the strategy we've been following is starting to yield some nice returns, and I think that's just beginning within the special opportunities portfolio and a lot of the portfolios that my clients are holding. Things like Kirkland Lake, North American Palladium, Largo. A lot of these companies have sprouted beautifully, and it's a clear indication of what's to come with the rest of the portfolio. The stock picking is working. That doesn't change the fact, though, that the central banks are stuck between a rock and a hard place. We've gone from about $100 trillion in 2008 to $250 trillion in debt now. The next recession's coming. What do we do now? Are we going to go to $700 trillion? Because if you look at the expansion, it's got to be exponentially higher. Well, something's got to give, and I think history has taught us that every time we've gone into a situation where we've solved debt with more debt, really the only way forward is for some kind of a monetary or debt reset. And always, that has been done through gold. For 4,000 years, gold has been money because it's the only constant thing that we can all trust to revalue things to. And that historical constant of that barbarous relic, as they call it, as they love to call it, I think it's important. Central banks are signaling that. What it was reported about a month ago, that last year they bought more gold since 1975 when Nixon and pegs. To me, that's a clear indication that I'm on the right track, even though the way that the message is being managed, those that understand are buying physical, are taking the physical away. And I think the producers is the place to be for the average investor, especially Canada. We're 80%, we just finished PDAC, 80% of mining comes out of here, and there's a lot of good companies to be had.
I was going to ask about the retail investor. So obviously it's not, say a regular guy like me, I'm not going to have a bunch of bricks of gold in my house, but you think put the money into the miners.
You know what, it's funny, I've always said don't put all in, but have at least, I started about 5 years ago with a 10% allocation. Now I'm sitting at least a 20% allocation with everybody, been increasing the allocation. It's about portfolio management. It's about having that hedge. Right now, if you look at the concentration at the asset allocation within the precious metals of North American investors, it's zero. Within pension funds, zero, nothing, right? But what do you have? You have guys like Gunlash, Ray Dalio, all the debt guys, the guys that come from the debt side, warning about the consequences of debt and how we're reaching some points of no return. I think we've already reached it long ago. To me, it's a massive opportunity. If history replays, there's a lot of wealth to be transferred over to these assets, and it's going to be a beautiful transition, and we're really showing it. And I think through the show we're going to talk about some of the top picks that are still there, and some of them have been doing extremely well.
How do you feel about what often gets referred to as paper gold? You buy an ETF representing gold, but you don't actually own gold, you own a piece of paper.
I've always said that the problem is that's why I like the producers. Reserves on the ground are on the ground, it's not paper. My analogy has always been a game of musical chairs where the Chinese are pulling out the chairs, but the paper gold, the physical contract. Last month, the Bank of International Settlements did 54 tons of swaps. That's how they're suppressing the price. That's the paper game. So the way to see it, it's a game of musical chairs where you're coming into the game. More guys are coming in with a piece of paper. The chairs are being pulled away. What happens when the music stops? Palladium signaling what happens. Palladium is up almost 100% since last August, I believe it is, because the physical market is overwhelming the paper market. And I think that's going to be the case for a lot of things. We can't manipulate markets without consequences. I've been positioning clients to benefit from those consequences. And shortages will be there. You know, the Chinese have been taking away tons. The Russians, the Indians, Asia, and central banks now. So that will have inflationary consequences.
Interesting times indeed, and just a warning today from the senior deputy of the Bank of Canada that all of this debt that we've incurred at home and abroad is holding back economic expansion. So that's the tough place you're talking about.
Well,
you throw more debt on it. That's been the solution before. Let's give people cheap money. The economy grows. Well, now we're in a
right, and that's the problem with the the marginal utility of debt. 10 years ago, maybe 20 years ago, for every dollar issued you were generating $6 of GDP. Now it's what, 10 cents? It's not working. It can't continue to work, right? And because of that, I think people should start thinking for themselves on how you position yourself and use history as a guide. I think there's a lot of money to be made because of it.
A lot of interesting discussions to be had in the next hour. We'll be back with Jaime Carrasco. He's a portfolio manager at Canaccord Genuity. Wants to answer your questions on precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call, toll free, 1-855-326-6266. We have an email from Mark. He wants to talk Keyera. What's your opinion of the name, Keyera?
Well, it's not one that I own. I've owned it in the past. I would not necessarily steer away from it because the dividend at 6.5. It's one that we like as a firm. Canaccord has it as a buy target with a $38 target. The dividend sustainable. I'm just been shying away from the energy sector. I've kept my, again, when I manage portfolios, I look at asset allocation, and I've maintained my asset allocation within the energy sector. Pipelines, utilities, and REITs, those I see different, but pure energy. Keyera is a bit of a diversified company. Dividend-wise, I would be, if you're looking for cash flow, it's not a bad one. To me, the energy, foreign energy, seems to be a little bit better because I want to get the volatility of oil prices, but I am concerned for energy prices out of Canada because we only have one buyer, the U.S. And so because of that, I'm a little bit concerned. But as a dividend payer, I've owned it in the past, and it wouldn't be one that at this current price would concern me too much. I think there's a little bit more upside. So if somebody's looking for a good dividend and buying something that has been down quite a bit, I think it's a good entry point.
13 buys, 4 holds, and 0 sells on the name. And the 12-month target price the street has on Keyera would mean 14% upside if it can get there. We have Colin on the line from Sarnia. What's your question, Colin?
Yeah, good golden afternoon, gentlemen. Thanks for taking my question. I am interested in adding some kind of bullion exposure, and I'm debating between the GLD, the monster ETF that has to build up and shed gold as people buy the units, and something like a physical trust like Sprott's Physical Trust. So embedded in that question is Canadian versus U.S. dollars as well. I'm wondering, Jamie, what would you do? Which one's better to buy into? And do you hold either one of them at this time? Thank you.
Perfect
question. Thanks, Colin.
I see gold as money. To me, the gold is no different than buying Canadian or U.S. dollars and gold and silver, physical that is. And because of that, the speculation will come from the producers. Gold itself I do own as part of the cash that I'm sitting on right now, and I do own the Sprott. I stay away from the GLD because I notice the machinations that are going on between the physical inventories of the GLD and the suppression through the swap market. JP Morgan, well, I don't trust them too much since '08. I still don't trust them. Fool me once, fool me twice, you know what they say. So GLD I stay away from, but Sprott is one that I buy, but I also buy the BGM, Nick Barashev's outfit, because there I get gold, silver, and palladium in equal places. So it diversifies that physical exposure a little bit more. And what's happening with palladium prices, it has benefit more. So that's where I've been parking the physical side. I also do recommend and buy for myself coins, silver coins. I think there's more upside to silver. And so to acquire silver coins and just keep holding them on a dollar cost averaging, be it through Sprott and have them mailed home, I think it's not a bad strategy to have. I think silver will have some pretty good upside. But again, these are long-term strategies, and you have to be willing to save and hold them.
Very interesting way to play it. All right, we have an email from Rich in Calgary who wants to talk about Capital Power. What's your opinion on this one, CPX? Capital
Power. Since it wasn't one that we mentioned in the on the phone, earlier on. It's not one that I had prepared. I don't have any comments on it. I've looked at it in the past, but dividend is okay, and that's all I can say about it. It's not much.
Popped out of the blue on us.
Popped out of the blue, exactly.
I went for it anyway. He's a pro. Ari in Montreal is on the line. What's your question, Ari?
Good afternoon. Thanks for taking my call. First-time caller. My question is on Fairfax. The stock has been range-bound for the better part of 4 years, and it's suffered some recent weakness. What do you attribute that to? Is that a reflection of interest rates, or is there something else going on with the underlying stock? Thank you.
Thanks for that, Ari. Welcome to the program. Hope you keep calling on a regular basis.
Welcome, Ari. Fairfax. First of all, I love Prem Watsa. To me, he can do no wrong. He's the Canadian Warren Buffett. Fairfax has been built on the back of the financial growth of the financial services over the years in North America. Because of that, I think it has been in a bit of downtrend, because all of the financials since October have been in a bit of a downtrend. I do own Fairfax, but not the North American one. I own Fairfax India. Because I think that if you look at India is like going back on a time machine into Canada back in the 60s, right? One thing when I met with Prem when they were putting that structure together, which I've owned as an IPO, and I still hold on to it, one thing that struck me was the fact that he mentioned that in India, 5% of homeowners have home insurance. That should really light, right? And so as a long-term strategy, I prefer the Fairfax India structure and Asia for a couple of reasons. First of all, currency. I think at the nutshell of the big picture, what we're looking at is the end of the currency reserve, the US dollar. We're starting to see those moves between the petro-yuan, the petrodollar, what's happening with OPEC. So currency-wise, anything in Asia will do well. The fact that we have a vehicle being managed by one of the best captains in the industry, to me, is great. Good management. So because of that, it's one that I've continued to hold, and I will continue to hold. I think it's a great place to be. And also the growth of the financial sector in Asia, I think, will be exponential over the next couple of years. So again, if you're looking at Fairfax, if I was buying it back in 1980, I think Fairfax India you're getting the same thing with much better growth market.
Interesting way to play it. Richard in Victoria. What's your question, Richard?
Oh, good morning, gentlemen. I'd like to say that, Mr. Krasko, you've become one of my favorite guests on the show. I want to know about silver bullion. I've been collecting it for the last year. I'm trying to get about 10% of my portfolio in it. I'm concentrating mostly on Canadian silver maple leaves for that extra 9. I was wondering what your opinion was on the poor man's gold for a smaller investor.
I fully agree. I fully agree that silver will have greater upside. I would not be allocating 10% of the portfolio into silver alone. My strategy is to look at my physical silver and physical gold as part of my cash position. So I wouldn't go greater than 2 to 3%, and that's about it. The rest, there's some great silver companies out there that will have massive leverage, and they haven't even started taking off, right? If you look at, for example, First Majestic, the ones with on a stock picking side, good management, low cost of production, reserves on the ground are key. And more importantly, where they are geographically located. If you follow those 4 rules, you're going to be picking some really good picks. I think silver, if you look at the long-term chart, and we're talking about 20 years, it's looking to have a massive break, similar to what happened in the 70s. So you are going to get the leverage. You will benefit from holding silver on its own, but I think you're going to be much better rewarded for your patience over all of this time of waiting for this thing to take off by owning the producers. I think the leverage that they're going to carry on an earnings side and the leverage of reserves on the ground is just going to reward people extremely well going forward.
Playing silver through the producers. We'll be back with Jaime Carrasco. He's a portfolio manager at Canaccord Genuity. Wants to answer your questions on precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call, toll free, 1-855-326-6266. Wants to talk about Vermilion Energy. Please provide 1 to 3 year outlook for Vermilion. It's at a multi-year low with a very high dividend. Is that sustainable?
I think the dividend's sustainable. Vermilion is one of the companies that I've held on within my energy content all along. Again, stocks go up and down. My approach has been to make sure that within the asset allocation of the energy, Vermilion is a 2% position. So once it becomes one, I automatically buy some, take profits from other areas. That's the discipline of selling into things that are going up and buying things that are going down, regardless of the market. Takes that emotion away. Vermilion, though, I think it's a great run company because they're not in North America. They're operating under Europe, so they benefit from not WTI, Brent crude, which is always trading at a premium.
That's what I find interesting about this name. Do investors forget that? It seems to sell with the rest of the market. Yet its exposure is international.
Right. But that creates an opportunity, right, to average down on a really good company at a regular basis. You know, one of the problems that I always, when talking to investors, is the patience, right? With the precious metals, having held Agnico Eagle all this time, just to continue to average down. I actually own more shares of really good companies now through the last 3 to 4 years just by sticking to my discipline. Well, most people, I got to chase the Dow, it's up again, right? To me, that's just fluff. It's money that's being printed that's pushing these markets all around. Again, all along, I've been working on the strategy that all markets are being manipulated. Some are being manipulated higher, some are being manipulated lower. Where would investors be putting their money if gold was anywhere near 3,000? If these swap agreements were taking place, right? Well, they wouldn't be running into the Dow as crazy as they are, right? And I think that's why things are being manipulated to present a message of, oh, everything's great, we're doing a good job. Now we know that, well, they're stuck between a rock and a hard place. Vermilion on its own is benefiting from the fact that it's not here. It is foreign, it's Canadian, it's converting back to Canadian dollars, and their earnings, I think, are sustainable.
All right, we have an email from Chuck. He wants to talk about TransCanada. What's your outlook for TRP?
I still hold TransCanada, actually. It's one of those that has consistently been in the portfolio within the income payers. I think, can you bring up the chart? Yes.
That's a 6-month we got there.
TransCanada. For some reason, I can't bring up the research report, so I can't say the target that we have currently on it. But it's one that we're still, personally, it's in the portfolio. It's pipelines, utilities, those companies, I love them because we're not making any more. We're not laying down any more pipelines throughout North America. So what we end up with is massive monopolies that can generate good cash flow. TransCanada is a little bit more diversified, and I think that from that perspective, those are companies that that will benefit long term. Also, the fact that one of the things about these companies that I like is that as prices start to go up, they can pass through to their end users a lot of those costs. So shareholders usually end up benefiting from them. And they tend to be quite negatively correlated to everything else. Now, having said that, within that portfolio, I'm high in cash because I do expect that if we get a market down like we did from October to December, these companies will sell out. So it'll give us better buying opportunities, which I took advantage of in January to add a couple more solid dividend payers on the decline, and now I'm still cautious of the market.
In the longer term, are you optimistic that we sort out the pipeline problems that we're having in this country?
Sorry. That's an interesting question because to what extent are those pipeline problems are long-term problems? First of all, I don't see any political leadership to really have a Trans-Canada strategy the same way that we had the railways to build throughout Canada. Why does Ontario have to buy U.S. refined energy for our users instead of shipping it from Alberta and using it ourselves, right? Politically, we're messed up. We kind of dropped the ball on that. I also don't see the social awareness to make that change just yet. So oil prices, inflation will have to get much higher before people really feel it in the wallet. At that point, I think maybe we start that readjustment. So maybe, that's a maybe, but it'll take a lot of pain and a lot of higher costs before that light comes on.
Probably a few elections as well.
Yes, and there I don't even want to go.
Big political. This will be interesting developments in the weeks and months to come. Stay tuned. The Past Picks coming up next. It's time for Past Picks. We go back to June 22nd of 2018. You liked Hive blockchain back then. What is going on with Hive?
I still like Hive, actually. The way that I see the blockchain is, remember the .com back in 2000? Well, out of that, we ended up with Facebook, Twitter, eBay, all of these companies come out of there. I think it's the same thing. The technology is beautiful technology, is a ledger, an electronic ledger. A lot of firms, Fidelity, are continuing. A lot of financial firms are introducing blockchain-backed Ethereum platforms to track all of that paperwork that needs to be tracked. And I think Hive is one of the ones that will benefit out of that.
So Hive is the quality name there. 'Cause I'm thinking there's other names like Long Island Iced Tea became a blockchain company.
Right.
That was that frenzy for a while. Right?
Hive is actually a miner.
Yeah.
The similar as Agnico. What they're mining is Ethereum and a Bitcoin now and Zcash, which are actual coins that are being implemented by the industry. They've been mining, they're one of the biggest, they're the biggest public miner in the world. So I think that throughout this period, they've been mining, continually mining more and more coins that are going to be needed. Because of that, again, the strategy has been to be about a 2.5% of the portfolio, and I've continually added as it came down. We just added again in January, we reorganized the portfolio. Once again, took profits from some of the names that were up quite a bit, and this is one that we bought. So I haven't lost faith in it. I just think it's early, but I would have loved to have bought Google back in 2000. Look at what's happened now. Everybody wants to chase it now. Well, I'd rather be buying them when they're in the dirt and nobody likes them.
Right, from crypto mining to more traditional mining. Agnico Eagle Mines is lying pretty much just flat over the time.
Yeah, this has been one of my constant top picks along the way. Management has performed in an unbelievable way. This company will be completely self-sufficient by the year 2022, I believe it was. At that point, they will never need any more money, and a lot of that money will get switched over to the dividend. Now, the dividend payment actually has been increasing with them. Their cost of production is down to about $650 Canadian. And by the way, gold in Canadian dollars is almost back where it was at 2011, almost at 1800. People haven't noticed what's happened to the Canadian dollar. If you bring up the chart back to 2015, which is the real key to Agnico, it was down at $22 and we're sitting at 58. So it's one of those that has sprouted nicely, and I think it will continue to deliver. One of the issues with Agnico, though, is that it's followed by a lot of institutions. So a lot of funds got rid of their precious metals position and they sold them. But to me, it's one that I continue to hold within the portfolio, and it should deliver well. One of the things that I think we're going to get out of these companies going forward is increase in dividends. We're starting to see it. Kirkland Lake has started a dividend. Agnico has increased its dividend. Franco-Nevada has increased its dividend. So that's starting to happen. So the strategy is playing out, but patience.
Patience. All right. North American Palladium was the third pick, and this is the big winner. Total return of 57% since June of last year.
Again, North American Palladium is one of those companies where we're starting to see that disconnect between those paper contracts, the musical chairs, and the chairs not being there. That's the problem. The Chinese and the Russians have stopped selling us palladium, so all of a sudden we have a massive problem. Oh, we don't have it. But yet we have all of these paper contracts sitting around. So if you do a chart of palladium prices is really the important thing, because they were trading at about $800 last August, and we're sitting at $1,500, right? And palladium storage, you know, it was in massive backwardation for the longest time, and now that it's showing in the price, I think that will also start to happen to silver, gold, as the paper shenanigans stop to. Manipulations never work forever, and people better understand that. The closing of the London gold pool back in the early 70s, which forces Nixon to unpeg, is a clear indication of that. There's palladium spot, and it doesn't seem to be wanting to come down anytime soon, and it's creating a massive problem.
Interesting plays. We're going to be back with Jaime Carrasco. He's a you got
one last thing. With
thought.
Palladium was one of those that when we cleaned up the portfolio in January, we took profits out, right? So again, we're selling into the ones that are making and re-rolling them, buying the ones that are down right now. And the portfolio, I love every company that's sitting in there.
All right, man who loves his own portfolio. We'll be back with Jaime Carrasco, portfolio manager at Canaccord Genuity. Let's answer your questions on precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call. It's toll-free, 1-855-326-6266. We have Rose on the line from Vancouver. What's your question, Rose?
Yes, good morning. Jaime, you are my absolute favorite investor when it comes to commenting on gold.
All right.
Thank you.
What I would like to know is about IM Gold.
Okay. IM Gold is one of those companies that I'm currently reviewing. It's not in my portfolio right now because in order to buy it, I would have to sell something. And so far, I'm allowing my big producers to continue to run. It is one of our firm's top picks, though, within our research team. And I have to say that Canaccord has allocated quite a bit of resources to the sector. We think that this is going to be like the weed sector once again, and it's just beginning, an opinion that I share. We have this as a buy with a price target of 850. They are executing on a number of projects that should be kicking in nicely over the next couple of years, so it's one that actually fits all of my criteria. They also, one of the reasons why I'm always looking at it is because they bought me out of Trelawney years ago, a big project in Sudbury that's finally going online, so it's full circle. IM Gold, you know, it's good management. One of the things I like about the company that kind of makes me want to jump in at some point is the fact that they have been lagging. If you look at it against the sector index, it has been lagging, and it's because all of these projects are just starting to kick in, so it should have good momentum going forward. But again, I would have to sell something or add something or take in more money before I can buy it, but it's one that would be definitely on my buy list.
I should mention to the audience we were showing you the American listing of IM Gold. So your call of $8.50 is the Canadian call, right?
Correct.
Yeah, so
correct.
It's still a considerable upside from where we are now.
Yeah.
Not quite as much upside as you thought from that U.S. chart.
One of the things to point out about the Canadian companies that's important is the fact that gold in Canadian dollars is not sitting at $1,300. It's up in the 1,800 mark. Back in 2011, you know, it's important to point out that back in 2011, when gold hit 1,900, the dollar was almost at par with the U.S. dollar. In gold in Canadian dollars has appreciated greatly, and nobody's noticing because we keep paying attention just to the U.S. dollar. You know, if you look at the Canadian dollar and the decline it has had, all of these companies will benefit greatly and will hedge us from those currency fluctuations that are coming our way.
Important consideration. Great way to play it. Peter in Vancouver. What's your question, Peter?
For taking my call. James, may I ask you about Sprott, Gold Billion, CEF? I've been holding it for a while. Do you advise to hold on or switch to something better?
Well,
thank you very much.
Good question. I've been holding it for a while as well in some accounts. The question is, why are you holding it? If you're holding to participate on the upside of gold and silver, it's a good place to be. If you're holding it as a cash component, it's a good place to be. If you really want the speculation, I would be moving out the risk spectrum and definitely looking at good quality companies to get that further upside. But anybody that's been patient and held on to these, to gold and silver on its own, or some of the good quality producers, will benefit greatly by continuing to hold going forward as this thing starts to move. Sprott is one of the outfits that I do buy because I know that they have the physical is stored, is segregated, and it's there, which is the important thing. If you don't have it, you don't have it. And I think that might be the problem with the GLD and a lot of the gold certificates that the banks have been selling, right? If you really add it up, they don't have the physical there to match the two. So something will break at some point. So no certificates, only physical. Sprott is good. BGM is the other.
We have Mark in Gatineau. What's your question, Mark?
Good afternoon, gentlemen. Yeah, Jamie, I'd like to have your thoughts on Argonaut Gold. I'm looking at that company. They have a very good management, for one thing. Good share structure at about 178 million shares. Books are in excellent shape, and it's been a profitable company over the last 8 years or so. They have two mines in Mexico. Might be a thing that people are not too keen about, but they're projecting to produce around anywhere between 200 to 215,000 ounces of gold. All-in cost should be hovering at about $975, and it's very undervalued in my estimate. Measured in the indicated resources at about 8.1 million, and they got that big project up in Ontario, Magino. If they can get that going, what are your thoughts on it? And would you buy at these prices? Thank you kindly.
Mark has definitely done his homework on Argonaut Gold.
No kidding.
He knows the story.
Actually, he nailed all of the things of why I continue to look at Argonaut Gold. Good management, good properties, reserves on the ground, low cost of production. Again, it's another one of those good quality companies that I would have to sell something to buy, but he's done his homework and everything hits. It's important to understand that these companies the biggest catalyst going forward, we are at the threshold, which is 13 to 13.50 gold. That's the global cost of production. So below that, the reserves on the ground are not worth much, right? One of the things that I'm playing is, and why Argonaut Gold is not necessarily in the portfolio, I have traded it for myself, is the fact that I want earnings right now. So as companies that are currently generating cash flow, let me back up. When I structure the portfolio, there are companies like Argonaut Gold that are just going into starting production that's about to kick in, right, that are there, but there are companies that are currently producing already. Those are the companies I want to own for the bulk of the position, because they're able to acquire more and more companies, right? A lot of the companies over the last year, Agnico has purchased almost 8 firms along the way because of the cash flow they're generating. So that's a benefit to me. The other thing with those is that as gold prices move on an earnings perspective, we're going to get that leverage in earnings. The next thing to come will be reserves on the ground. Think about Agnico back in 2011, when gold was at $1,900, their cost of production was $800. Well, their reserves on the ground which was about 20 million ounces, were trading at about $100 an ounce. Right now, they're trading at 0, right? So eventually, those kick in, and that'll be added to the equity value of the firms, right? Argonaut Gold will deliver on all those, but it still needs to kick in earnings. So if it's going to be the only one you have, I would say look at the other ones first and then shore up with those. This, to me, would be about a 20 to 30% allocation within my precious metals position, because I also want the benefit of the other ones. And right now, the producers are trading ridiculously cheap. I would say at about a fifth. You know how we have the Graham Dodge value propositions of 30% discount to business value? Well, most of the good quality producers are right now trading below 50 to 60% discount, right? So why bother assuming greater risk out the risk spectrum? Just stick to those and then build around that and let that build.
Sound strategy. Jerry in Vancouver's on the line. What's your question, Jerry?
Gentlemen, Jaime, Pan American Silver, buy, sell, or hold, and why? And Greg, can you give us a street consensus, please?
Sure thing, Jerry. Thanks. Pan American Silver.
Not one that I own. We have it as a buy, though, internally. I don't own it because I see it more like a Barrick or a Goldcorp. I've stayed away from those companies. I find them too big. I'd rather have the leverage of the ones that are clean, like First Majestic, America Silver, on the silver side, or an Agnico Eagle or a Kirkland Lake, right? So those, the way I see it is, if you look at the high-tech cycle from 95 on to 2000, IBM did this, Microsoft did this, and the Netscape. That one took off, right? So
Netflix.
Not Netscape. Netscape, the browser.
Back old school. Netscape.
Back old school. Netscape, right? That was the first real investment wave I rode, so I never forgot how those returned, right? IBM was a traditional one. It was a steady grower. Once the high tech got going and earnings, it moved. But Microsoft went from what, $9 to $2,400. Netscape went from 5 cents to almost $300, right? So it had an even bigger exponential move. I'm trying to nail the ones that are going to function like Microsoft, Agnico, those guys that are going to have the earnings leverage plus the other. To me, Pan American, the big boys, I'd rather stay away from them. They have too many internal problems. They've survived by selling assets. Well, the companies I own have been buying those assets. Marigold Gold was purchased by, not Eldorado, sorry. Name doesn't come to me, but it was definitely bought by somebody that I own along the way. SSO now, Silver Standard.
Okay.
Silver Standard bought them, right? You have USA just by Pershing Gold, Agnico bought so many different, Almadem, Camdem, almost 5 projects, right? So I'd rather be in the ones that are acquiring, not the ones that are selling. And because of that, Pan American I tend to stay away from, even though I like silver.
Netscape. I got that little N in the corner of the browser with the stars going by.
That stock made me a lot of money.
It took me back to 1995 with that one. Jerry, as far as Pan American Silver is concerned on the street, 6 buys, 4 holds, and 1 sell on the...
And we do have it as a buy with a $21 target, but we've just lowered our target.
We'll be back with Jaime Carrasco. He's a portfolio manager at Canaccord Genuity. Wants to answer your questions on precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call, toll free, 1-855-326-6266. We have Chris on the line from Fredericton. What's your question, Chris?
To America, I'm underwater slightly at the moment. What's your forward opinion on it, and could I have the street opinion, please? Thank you.
Bank of America.
Why don't you bring up the street opinion in the meantime? But okay. Bank of America, I took the call because I think if we look at the chart over the last 5 years, it's pretty indicative of one of the things that I see within the banking sector is what a correction it took since October. We see that decline, and we've finally come back up. My advice, take your profits and walk. Because really, if that is the real problem and the Fed's stuck in you're going to really be finding out if they've solved the real problem. They've put a lot of money into these banks, into the financial system, but the debt's still there. So I've been negative that sector forever. I would say take some money off the table. Take advantage of this bounce. If you look at the bank index on a long-term basis, it really started breaking down back in 2018, right? And so longer term, I think to me, it's a sector that I wouldn't want to find out what kind of
what the long-term
what's under,
effects are, what's happening.
yeah, what's the true condition of the sector? You know, it's funny. I was reading a report that of the amount of unrealized losses that the banks are carrying. Like we're talking about a couple of hundreds of billions of dollars that they're still carrying on the books as unrealized. Well, you know, all that is garbage that I'd rather not deal with. So for investors, I'd say, you know, if you've made money or if you've got the rebound, it's one of those that I would be moving out. If you want to play the financials, India, to me, is a much better place because it's like a time machine. And there I'd rather be sitting on assets long term. And Fairfax India is where I'm sitting in my financials. And the Chindia ETF as well. Because I think China, on a currency basis, we need some adjustment. Let's talk about that for a second. So I was really impressed over the weekend because, you know, if you look at the trade agreement being negotiated between the U.S. and China, first of all, it's taken quite a long time. And over the weekend, I keep saying that, okay, this can't just be trade. It's got to be currency. For Trump to really MAGA, make America great again, he's got to kill the dollar. There's no way he's bringing manufacturing back to the U.S. with the dollar at this level. For China, killing the dollar also works for them because they have this 500 million in middle class that were producing cheap stuff for the Americans. Well, they got to become consumers. They can't become consumers unless the yuan appreciates. So the currency reserve must change. Within that, the currency play, I think it's one of the important things because that's what really history is telling us, that the only way to resolve the problems go back to 1933. The 30s are repeating. In 1930s, all of the debts were in sterling. Roosevelt solves the problem by creating a brand new dollar backed by gold. Well, today, all of the debts are in U.S. dollars. What Roosevelt does is he devalues the value of all those debts against the new dollar. Well, how do you do it again? All these debts are in U.S. dollars. We have trillions and trillions. How much you have to devalue it so it's no longer a problem against a new currency? So to me, that is really the chess game that we're about to see an end. On the weekend, the PBOC referred to the agreements as a currency agreement. Interesting change in language. I posted that on LinkedIn because I don't think anybody noticed. The Americans came at it again on a tariff agreement.
All the headlines are about tariffs.
Right, but not out of China. They're talking currency, right? The petro yuan, the petrodollar, things that I've been following as part of the chess puzzle, right? That to me is the really, as, what's his name? The page 16 story, what's happening in the background. It's really what's happening between the petrodollar, the petro yuan. The fact that Italy said, well, we're going to go with China. We're joining the Silk Road, but for that, they need their gold back. Everything, again, is tied back to gold.
It's the great thing about having Jaime on, the depth of knowledge. Chris, you did want the street consensus on Bank of America. 21 buys, 12 holds, and 0 sells.
Sell.
Well, we know Jaime's a contrarian on that one. There's a 1 sell we can add to the list from Jaime. We got a tweet from Dan who wants to talk about preferred shares of banks. What do you think of the preferred shares of banks like BMO that just reset at 5% as a lifetime retirement income stream?
Again, you know, it's when it comes to cash flow, it's not it hasn't been a bad place to. Can you bring up the chart of that preferred?
I don't think we can show preferreds.
Really?
Charts.
Okay.
I'm not sure. I'm just wildly speculating. We cannot. We cannot. The voice of God.
Okay,
says
perfect.
We cannot.
Only because one of the concerns I have is on the resets, right? The resets are occurring, but you have principal issues, right? So right now, rates are flat. They have to stay flat, but what happens when they spike? I'd rather not be playing that. Right now, I'm adding a convertible bond. So I've been, for the cash flow side, I'd rather be playing the convertibles that are convertible to stocks that I like. I'd rather be playing cash itself. I'd rather be playing the high dividend companies that have upside, the pipelines, utilities, REITs. And I think that's a better strategy for me, only because I don't want to be having to question the debt covenants of the banks at some point in the future, especially with these investments that are highly liquid. You try to get out of them, and there's a problem, right? When everybody starts selling, what happens? So unless you're really willing to hold on long term, and then again, I don't fully trust the financial sector. I haven't since 2008. I would myself shy away from them.
All right, we're going to be back after a short break. We're going to get Jaime's top picks when we return. Got a minute and 50 seconds and 3 top picks. Whoa, North American Palladium. Let's start there. You still like it?
I still like it. It's one that I've actually taken a bit of profits, but I think it has upside. I bought it because it's the only palladium producer, main palladium producer, and look at what's happening with palladium prices. So it should continue.
Kirkland Lake Gold is next on the list.
Kirkland Lake Gold has been the best performer in the portfolio. It's one that I've taken some money off, but it'll continue moving. What I like about it is really showing us what's going to happen to all of these companies once they start moving. Reserves on the ground, good production, solid.
We went through the first 2 very quickly because I know you want to spend a little bit of time, and we don't have much on Valens Growworks.
Right. This was my first entry into the wheat sector, and what I looked at was the fact that these guys are extracting the chemicals. The different industries need the extraction. It's being done through oils. These guys are extractors, and because of that, the margins are higher. They're just getting going in revenue. I think this company will eventually get taken out. They have all the licenses. It's important. I have to warn, though, that I will be taking a bit of profit off this because there's a convertible bond coming out of another extractor. So I'm going to diversify into another one with an 8% yield plus conversion and a half warrant. So it makes a lot of sense. I want to own both. But this was my first entry into what I think it's, alcohol after deregulation in the 30s. Again, the 30s are repeating as well with weed, and this one's it.
All right. Always fascinating to have you here, Jaime. And if we want to look through those topics a little too fast for you, you can always head over to the website, bnnbloomberg.ca. Look forward to the next time.
Always a pleasure being here. Thanks for inviting me back.
That's it for this edition of Market Call. Stay tuned. Don't turn off the TV. Lots more great stuff coming up on BNN Bloomberg.
And thank you, everybody.